how much risk-reward ratio you need in trading in order to become profitable. Today, we will understand top 3 most used risk-reward models. And also at the end of the video, we will understand 5 most important key points related to these models. So stick to the video till the end. 1:1 risk-reward ratio. If you pay close attention to this chart, then you will notice 2 support lines on the chart. After breaking the consolidation zone with a strong bullish candle, price eventually goes up. As a result, a long trade setup is formed at buying side of the chart. Some new traders will enter in the market after witnessing a hammer candle. As a result, they will set their profit targets at resistance level and stop loss at lower support zone. In this trade setup, the stop loss is set to the same number of points as take profit. These types of trade setups fall under 1:1 risk to reward ratio category. In order to become profitable in these trading setups, your trade winning accuracy should be more than 50%. This means if you are taking 10 trades a day, then at least 5 trades are supposed to be profitable. Otherwise, you will stay in loss at the end of the day. Plus, you also have to bear brokerage fee from your own pockets. If you are trading in stocks, then it is not advised to do 1:1 risk-reward ratio trading because of huge brokerage fees and taxes, and also because you are taking a lot of small trades in a day, which results in huge losses. You also become victim of overtrading, which badly affects your trading. Psychology. However, if you are an experienced trader, then you can trade profitably with this setup. In all risk-reward models, 1:1 risk-reward ratio model is considered as the worst model. Now let us understand 1:2 risk-reward ratio. In this chart, price breaks the consolidation zone, then makes a swing high, and then form a bullish engulfing candle after coming back to previous consolidation zone, resulting in a strong reversal setup. New buyers enter in the market by placing stop loss at support level and take profit at recent swing high. In this case, take profit is set at 2 times the number of points set for stop loss. In this risk-reward model, your trade winning ratio should be round about 33% in order to become profitable. This means you have to hit your profit target at least 3 or 4 times out of 10 times. This risk model can be beneficial if you are an intraday trader and trading options. Also, you can do scalping, where you can be profitable only by winning 3 out of 10 trades. You can use this risk-reward setup in any time frame. However, it is important to control your emotions because market will not hit your profit in a straight line. After you take entry in the market, price will go up and down in order to test your patience, but you have to stay strict regarding your stop loss. Now let us understand 1:3 risk-reward ratio model. During intraday trading, it is difficult to spot these type of trades having 1:3 risk-reward ratio. You can successfully apply this risk model only if market is trending upward. In these type of trades, take profit is set 3 times higher as compared to stop loss. Interestingly, if your win rate is only 25%, then still you would be able to make some profits from the market. 3 risk-reward ratio. Setup is most beneficial for people doing swing trades. However, if you are new in the market and struggle to become emotionally stable, then you can hold some quantity for big trades through partial booking by placing trailing stop loss, which eventually helps in holding your trades. Now, there are some important key points regarding these models that you have to understand. Point number 1, if you are trading options in 5 minutes time frame, then 1:2 profit ratio risk model is most suitable for you. However, do not enter in the trade if this setup is not formed. Point number 2, if you are a swing trader, then you can use 1:2 or 1:3 risk-reward ratio model. Point number 3. Number 1 thing you are supposed to ponder before entering in a trade is your stop loss. If take profit is bigger than your stop loss, then only think about taking a trade. Point number 4. Rather than thinking about stop loss in your mind, you should place stop loss in the system. Point number 5. Do not take more than 3 or 4 trades in a session, and if your stop loss hits more than 3 times, then don't take further trades. If you love this video and want more videos related to price action, ICT, or risk rewards, then subscribe this channel for more videos.